Hello, my friends. It's the Crypto Lunatic live from the Lunar Café. Now, where is the crypto market at the moment? Where is it? Is it about to blow up? There is fear everywhere. Fear everywhere. Now, there's two chains of thought here. The first one is get out, protect your assets. Everybody's running for the hills. We're almost definitely in a bear market. That is one of the big narratives that's running at the moment. The other narrative is this the final flush out for a nice little surge up? Well, today we're going to deal with data. And we're going to ask AI. When in doubt, ask AI, something emotionless that will just look at all of the facts. And we're going to have a little exploration because I'm not going to advise you one way or another. I'm just here to report the facts. I know what I'm doing. I know what I think, but it's not really about what I think. It is about what is the data showing us. And today, my friends, I'm going to give you the data and you're going to make your own decision about whether we are dying in crypto or whether this could be the opportunity of a lifetime. So, with that in mind, my friends, join me on a little stat-filled journey with a bit of AI opinion. So we start on DeFi Llama, as you know, I like to do. And we go to ETF inflows, outflows. Now we've seen brutality. Look, my friends, since here, October the 28th was great, but ever since there, it's been pain. It has been house of pain all the way through as people rush and money bleeds out of crypto. Bleeds out, my friends. It has been brutal. This has been apocalyptic if you start listening to some of the comments that I've read. Panic, panic, panic. This is probably something like it was the time back in the Stone Age where they were just sitting, having a nice little barbecue, and suddenly a little person appears in the horizon screaming, "Get out! It's the T-Rex! The T-Rex is on its way! Get out!" And some people will just be running for the hills, and other people go, "This guy's just having a laugh." Of course, there's not a T-Rex. I can't see a T-Rex, so it's not here. So the question is, who do you believe, my friends? Who do you believe? And what we've seen here, look at this, a nice cheeky little upside. So yesterday was the first day that we actually see some positive inflow. But the point being, folks, these are exchange traded funds. These are professional grade products. And as we've talked about on this channel, there's a lot that are pending, a lot pending application in the stuck in the US government at the moment because it's all closed down. So there is a glitch in the matrix. So with that in mind, let's look at something a bit more detailed. Let's look at the total Bitcoin spot ETF net inflow. And as we go through dates, now here were greener times as we go back to October. It was all very green. It was all looking rosy in crypto. And then suddenly, look, things started to turn the hill just coming to the end of the month. And then look at that, folks. As we hit Halloween. Well, there's a coincidence, isn't it? The Halloween blues and blood is flowing from crypto. The horror story is unfolding before our very eyes. It is Jason and all of the other Halloween type characters have come to murder crypto. Murder crypto, they have, my friends. Absolute butchery. It is disastrous. This is definitely the sort of crypto environment where you wouldn't go with a bunch of friends to a stranded holiday home in the middle of the hills. That is what not to do in this environment. It would be brutal, brutal. So, but the bottom line is, folks, look, we're just starting to see some positive inflow. And let's look at the ARK ETF because they were bleeding quite savagely. And look at all of this inflow 664. And then suddenly a little bit out, almost the same out. This was the bleeding part. And then look, suddenly, as of the 5th, in goes 817. Now, my friends, you ask yourself this, why would they do that? If we are in such a savage bear market, why are we looking at this? But who knows? It could be more manipulation. It could be more flush out. We don't know. All we can do is read data and make our own mind up. So now we look at the spot inflows and outflows. So this is how much money's going in and out of crypto, and this looks brutal, absolutely brutal. Again, look, spot inflows, the net flows, ins, outs, shake it all about, my friends. But the bottom line is, where's the money going in? And we can look it back to 30 days, 15 days, 7 days, blah, blah, blah. And look, if we go back to a 30-day period, we've seen brutality in the market, brutality. But what you are noticing that as of 4 hours ago, there seems to be a change in trend. Now, is it significant enough to be a turning point? Or is this just a glitch in the matrix? Is this just the shakeout of people going short? And these are the things you have to ask yourself. Because if everyone thinks crypto is it's going into the ground and everybody's laying shorts, and they'll need to flush them out as well. So could it be a false dawn or is it a turnaround in the market? But look, there's definitely a turnaround here because it's looking decidedly green in all crypto areas except for Leo as of the last 4 hours. But the point being that that is what the indicators are telling us. So what I've done my usual free AI engines. Now, the reason I do this isn't because they're highly accurate and should be trusted. It's because AI analyzes data and each one has different pros and cons. But the thing is, it's emotionless. The thing that rinses most people in crypto is having way too much emotional attachment. With AI, we ask simple questions, and I've asked exactly the same question to AI for all three of them. What key news and events are most affecting the crypto market right now? Also, given the balance of probability, what are the chances as a percentage that we're in a bear market versus in an accumulation pullback phase, the next step up in a bull market? So there you go. That's the question I've asked. And here we go. The crypto market is currently experiencing significant volatility. Well, this is tell us something we don't know. A downward pressure. Several key factors driving sentiment and price action. So here we go, my friends. The key factors affecting the crypto markets. So macroeconomic uncertainty, particularly around the US Federal Reserve, interest rate policies has shaken investor confidence. So hints that rate cuts may not happen soon have pressured risk assets like crypto. So a recent historic liquidation event that saw 19 billion of leveraged crypto positions wiped out in a single day. 19 billion, folks, in a single day. That's how quickly you get rinsed in crypto if you don't know what you're doing. A prolonged US government shutdown, which we know about, the broader weaknesses in tech and AI related stocks have spilled over. Many altcoins have seen several steeper falls, and market participants are increasingly wary with sentiment indicators plunging to extreme fear levels, my friends. So the bear versus pullback or accumulation. So several sources state that Bitcoin officially entered a technical bear market this week by falling over 20% from its recent peak. However, some analysts argue that the market is in a forgotten phase, a mid-cycle consolidation, neither in a classic bear market nor a bull market, drawing parallels to a similar calming periods that have historically preceded major upward moves. Bitcoin's price remained significantly above its year low and only recently slipped below its 50 to 200-day moving averages, indicating strong but wavering support. Altcoin performance, Bitcoin market dominance rising, and extreme risk aversion signals. So we are likely in a late bear, early accumulation phase rather than a full reset. So the probability of bull market versus an accumulation or pullback. The probability that crypto is in a classic bear market defined, now it's going by classic definitions here, as a greater than 20% drawdown and sustained risk of flows is approximately 60 to 65%, with about 35 to 40% chance that this is a pullback, according to Perplexity. Most analysts currently lean bear, but acknowledge that this could be a sharp mid-cycle correction, a possibility not to be dismissed given previous cycles. So that's the first one, ChatGPT. So the breakdown, key moving events. Now, a lot of this is going to be the same. Liquidity stress and large drawdowns. So the market just endured a massive liquidation event with the total crypto market cap facing significant contraction and traders getting squeezed. So the flagship token Bitcoin slipped beneath the 100K, a psychologically important level, although it's above that now. A large number of options expire for Bitcoin and Ethereum, so 5.5 of 5.4 billions worth, which can exacerbate volatility as positions get closed or rolled. These kinds of liquidity and derivative driven events often signal elevated risk and least market stress. So, on the macro, global regulation continues to loom large. Interest rate policy, which we've covered. Institutional adoption risk, advancing new ETFs, a form of exposure to crypto. So, sentiment, consolidation, and pause signals. Some analysts are pointing to a consolidation in Bitcoin as a healthy pause rather than a pure collapse. The idea being accumulation may be underway. And from the ETF flows, we've seen that there's certainly some buying going on yesterday. So altcoin weaknesses, whilst major coins like Bitcoin and ETH are under pressure, some segments, e.g., AI tokens, niche DeFi plays, may be exhibiting resilience. However, broad altcoin weaknesses signal risk off mode. So here we go. The bear market versus accumulation. So, liquidity stress, large drawdowns. On the other hand, the presence of institutional flows and regulatory frameworks are evolving and consolidation rather than collapse. So, if we treat the cycle lens, crypto historically goes through cyclical phases, accumulation, run up, and blow off top. Bear accumulation. Some argue we might have exited the blow off top and could be in the early bear or very late accumulation. So, because there's significant uncertainty about the macro regulation direction and crypto remains highly sentiment driven, I inclined more towards caution. So, hence, greater than a 50% for bear, but acknowledge a meaningful chance of a recovery, hence 40% chance of accumulation. So, there you go. There's a few key things to watch, which we'll all be watching, of course. And that is ChatGPT. So still a fairly conservative. Now let's go to Grok. Now bear in mind, Grok gets all the influencers and all the traders. It has a lot more information to draw from. So key news and events. Here we go. So crypto markets experience heightened volatility. Yes, we know. We know about the 100K mark. We know about things like this. ETH is struggling. Yes, we know that. Fear and greed index at 21. That's very, very fearful indeed, if not extreme fearful. So here's a breakdown. So you can read through these. These are the same things that we've just covered. Government shutdown, Federal Reserve uncertainty, rising inflation, regulatory issues. So there we go. Ripple's swell 2025 closed 500 million investment at 40 billion valuation. So there you have it, my friend. So lots of mixed insights here, which you can read through should you wish to do so. But here we go to the overall macro headwinds dominate. Structural adoption, stablecoins, ETFs with 30 billion plus year-to-date inflows. So we've looked at all of this, but let's look at the probability. So notice that Grok has massively shifted the percentage here in favor of an accumulation pullback phase, saying 30% bear market, 70% accumulation pullback. So one final thing, my friends, which I think is really important. This is CoinGlass. Now, this is bull market peak signals, and it's got all of the signals that indicate that we have reached a peak in the bull market. Now, if it thinks we've reached a peak, it goes red. If it thinks that we are not anywhere close to the peak, it goes green. And look, it has got hold and it's almost entirely at the left-hand side, which is completely contradictory to everything that we've just seen. Look, green, 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 green. All of the indicators here indicate that we are just here to hold, my friends. But again, these are just indicators. These are the facts. Now, there's loads more information out there, my friends. I just wanted to give you as balanced a view as I can to make your own investment decisions. Because this is not an investment advice channel. It is reportage. I report things. I've got my own opinion. I do my own thing. I never encourage anyone to copy me or do anything like I do. I'm here to try and give you the best balanced view so you can make your own decisions. And on the balance of probability, there is a big wave of people that think you should get out. Cut your losses, my friend. Certainly, if you've got any leveraged positions, you should probably close them. You should probably go. You should probably at least adjust your risk profile and be just a little bit more risk on in especially leveraged positions. But there is a case for saying that this could be, for the bold, the opportunity of a lifetime. But it doesn't matter what I think or the stats think. What do you think, my friends? Does fortune favor the bold? Is this the best pullback and entry opportunity in history? Or is this the final flush out where all the crypto heads get absolutely wrecked so that the government and the ETFs can go in and they can buy up all the Bitcoin and increase their little reserves of crypto at your expense? Well, who knows, my friends? Who knows? I definitely don't. I'm just a lunatic sitting here on the moon, sipping tea and eating cake. Let me know your opinion. And if you've enjoyed this video and you're still watching and you want more of the same, then do like and subscribe to the channel. If you want another one of my videos, you'll find that just there. But either way, stay lunatic, have fun, and make money with crypto.